Welcome to Bears in Exile. Today is January the 31st, Thursday, and this is a quick hit on the indexes. Starting off with the Dow. And finally we got a small kink in the Dow. We had the downtick yesterday in SPX, which was a little bit of a tell that we would have some weakness in the market. The Dow down almost 50 points today, and now we finally get our downtick on the Dow. Been waiting for this for a really long time, the entire month almost of January. And what exactly does it mean? Well, the bulls don't have anything to worry about, like I've been saying, because there's no way, even with a bar retest, that we're going down here to this level right here. I just, we'd have to lose 600 points or something to hit that, and I just don't think we're going to lose 600 points in the short term. But what we do have is this downtick, and this downtick does give us a really nice target at the, I'll just call it an even 13,750. So 110 points from its close today. That really is not much. It doesn't even take us into the previous high over here. So very, very minor, very, very mild. I'm sure 100 points would feel like the end of the world and shake out some people, and that's fine. You get a lot more shorts on board and ready to be crushed. So it is an extremely healthy thing at this moment. Now, if things change and it looks like it's going to be much larger, then we should have some warning signs about that. But as it stands, it seems like it would be a good reloading opportunity at this point. But we'll see how it develops. We do have everything coming into alignment. Only the 14-day RSI moving average isn't pointing down yet. Everything else is trying to tick down. Do I think that it's going to get all the way from the top to the bottom? I don't. I don't. I think it'll only be a partial. But we should have some warning signs before that happens, if it changes. Going on to SPX. We had the down tick yesterday. We know that it's only worth about 10 points. Today it lost not quite 4 points. A nice start to the downtick target. And yeah, we don't have too much farther to go. About 8 points roundabout. And just like the Dow, we have good alignment on everything. There's no reason why it can't go another 8 points, maybe 9. And take care of both of the downtick targets on the Dow and SPX. There's just nothing else to say about that beyond that. Moving on to TNA. Now TNA is very interesting because we know we already met the downtick target. That happened yesterday. It happened all in one day. And according to the rules, we have to see what it wants to do next. And it did not have a bad day. Not a bad day at all. We, of course, bounced. And we also beat the halfway point and closed above the halfway point of the big red candle. That is also a positive sign. So this is giving some indication that there's plenty of strength still out there. And yeah, we don't even really have movement down, in nice accord here. We have the 14-day RSI moving average holding high going sideways. The stochastics are still going down, but the CCI is already going sideways. The RSI actually had a tick up. We barely have a bearish cross on the MACD. The MACD histogram ticking down. Sure, we could have some more weakness here, but there's nothing here that is screaming, it's time for it to go back to the long-term moving average bar. Normally, if you see that, after you have a downtick target completed, then you have further weakness, and we do not have that. So, another reason why not to be afraid of the bubble corrective target being met in the down SPX. And last night I looked at the VIX. I haven't looked at the VIX yet, so I might as well do that. And look at that. Just like I was saying last night, the VIX looked nice. It had already completed its uptick target. It was coming in on the long-term moving average bar. It should have problems with the long-term moving average bar, but we weren't completely certain because we haven't had any interaction since the last flip. And look at that, it starts right at it and retreats. So, doing what it's supposed to do. Oops, I just messed that up. And beyond that, what do we have? Well, we also said that the stochastics were pretty darn high already. And same could be said for the CCI. The RSI is almost there, not quite. We do have an uptick on the 14-day RSI moving average, which is very interesting. And we have, of course, we have the bullish cross on the MACD histogram going up. But we could have a secondary reset. These go down, meet the 14-day, and then it can continue on its merry way up. But for the short period of time, the best thing that the bears should be able to muster is a penetration into the bar but not conquering it. That could account for the bubble corrective move in the down SPX, but following that, we would have to have a secondary reset before it can finish out its move to the upside. So short, medium term, limited up, and followed by down, and then hopefully a real up. So there it is. Really hope that that helps, because it all makes sense to me anyway, but I hope that it is logical and probable, but there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.